How's it going, fellow traders? It's Magic Trader here, and it is February 14. Happy Valentine's Day to all of you out there. I'm gonna make another video, and this one is me just going through all the markets that I trade. We got a lot of volatility today, so a lot of movement on the charts, which means some new supply and demand zones were formed, and we got to do a little bit of chart work and see what the work presents. Okay, there might be some trade signals. I scanned through some of the charts and I saw some new trade signals, and yeah, so I'm going to go through everything and see what we can find. All right, let's start with gold. So excuse me, what do we have here? So taking a look at the higher time frames, right? We have a monthly area of demand in control, so the force of price is upwards. And so we had price moving away from it, hitting this resistance area, falling back, and then testing now this weekly 20 EMA. Now, I posted on a previous video that one of two things is going to happen. That price was going to respect this weekly 20 EMA. We were going to see a push to the upside. Or what I said would be ideal for me would be a drop all the way down here to this weekly area of demand, where I'd be interested in getting in long. So right now we are responding to that weekly 20 EMA and we're seeing a push up, but we're pushing up right into this area of supply. Okay, so I would not be interested in going long until this area gets taken out. Okay, and here's the reason why. Because when I look at this chart, what do I see? I see price moving to the upside, taking out a weekly area here of supply, and forming a couple areas here where the institutions had buy orders. Over here they filled in about 48,000 buy orders. And so let me see here. You could actually say that this zone never even broke. Yeah, you could say that. And would that be this zone? No, let's see. No, it would have been this one here. Okay. Just checking something out here. So, how I draw my zone, this zone was taken out, and this zone was taken out. These two zones were taken out, right? Price was trending upwards. Very strong. The very strong uptrend. What happens? We see that price drops from resistance, breaks through this trend line, breaks through one zone, two zones, leaving behind an area of supply. So one of two things are going to play out right now. That area of supply on the daily chart represents one of two things. One being an area where the institutions were filling in sells, are doing two things: profit taking on longs and filling in short positions. Now, since we're discussing that, let's take a look at the COT report, and let's examine this together. Okay, so what do we have here? So January 29. So look at the dates here. January 29. Profit taking. So what we can see here is that January 29 at those highs, shorts were not added to. In fact, they were reduced. And long positions were closed out for profits. Okay, so profit taking up here. So one of two things are happening right now. price is rallying back up to those areas where they were taking profits on their longs. All right, we know that they're reducing short exposure. Why? Because eventually we believe that there's going to be a bigger move to the upside, right? And they want to, they're just repositioning themselves to get better prices on their long positions. So when you're aggressively long, you take profits on those longs, you allow price to drop. Okay, they were exposed to the long side by 77% exposure. So there's room to put numbers up to the 80s, 82, 83, even higher. So how to increase your exposure is one of two ways. You increase your long positions, or you decrease your short positions. So we see that they're doing both, which is great, because they're taking profits on longs. They want price to drop so that they can get in and pile in a little bit more on their longs. The question is, how much they want price to drop. Is this enough for them to say, okay, fine, we did enough profit taking, now let's get back in and pile on hard with our long positions? Possible, very possible. But what makes me believe that there's a higher probability of price dropping is that when we take a look at the euro and the pound, they're both hitting monthly areas of supply. All right. Now, monthly areas of supply don't usually get removed quite easily. They get respected, and we see price reacting from them. So, this just by taking that into consideration, it gives me the it gives me the belief that there's a higher probability of price moving down like this than this being taken out and moving up. It's possible that that happens. It's very possible, but I think the probabilities are on the side of seeing more profit taking on the longs. That's just what I'm seeing at this point. Okay, so that's what's happening right now. We're testing this area. It's either from here we go lower, or if we're going to go long, we got to wait for this area here to get taken out, because we know that that's where the institutions were taking profits. So if they're not interested in taking more profits long here, and they start taking price higher than where they were taking profits on their longs, then the probabilities are price is going to continue to the upside. Okay, it's as simple as that. Alright, so let's take a look at oil. What do we see with oil? Well, they've been doing their profit taking thing, which is what we've been expecting. And same thing with gold. We have here an area on the weekly chart where they were taking profits on their longs. Right here. So the idea is that if price does get back up here, they're going to take more profits on their longs, and we're going to see a bigger decline. If this area is taken out, then that means this area is no longer an area that they want to take profits on longs. And if we start to see on the COT report that they're adding longs very aggressively and reducing shorts, then there's a good chance that we're going to see that move up here. Okay, and if at these highs they're continuing to add longs and close shorts, then the likelihood of a push upwards is going to be present. All right. So I'm looking to get in long here. Like I said, I have to wait for a trade signal to get in long. We've got this weekly area here of supply. So taking longs, we'd need this area here out first. Okay, we would need that because it's also a nice monthly bearish engulfing, which is going to really put the brakes on price if price does rally up. So there's no trade signals here just yet on the oil, so we have to just wait patiently for that to happen. US dollar, my broker still hasn't updated this chart because they said that they're looking for liquidity providers, which is just ridiculous. So there's nothing really that I can show you here. Basically what's happening is price reacted to this weekly area of supply, and now we're getting a drop. And if you are very technical, this is what you have here. An area of demand. Once price gets down here, we should see a bounce to the upside. Okay, considering again the pound and the euro are hitting monthly areas of supply, this is the move that I'm expecting to see on the charts. If these areas get taken out, then it's more lows to come. Okay, so we're just waiting on that to see which direction the institutions want to take things. So in terms of looking at the Aussie and comparing it to gold, it's pretty much in the same scenario, right? We got on the weekly chart, price was rallying up. We're testing this weekly 20 EMA, and on my last video I said one of two things can happen. They can hold price at this weekly 20 EMA and we can see a push higher, or we can see a move lower down to this area of demand where I'd be interested in going long from there. So taking a look at all time frames, what do we see? Force of price is up based on monthly, force of price is up based on the weekly. It's just about how much of a retrace, but we're hitting supply. Okay, we're hitting an area of supply on the daily chart. Daily trend is broken, so it's expected that price drops, right? Gold is hitting that area of supply that I pointed out on the daily chart. Aussie's hitting supply that I'm pointing out. US dollars hitting demand. So you see a theme being built here. You see what's going on here? All these charts are hitting daily areas of supply and demand. So excuse me, let me just get a sip of water. So you start to see the confluence here, right? If this zone gets taken out, then that changes the story. If gold's daily supply zone gets taken out, that changes the story. If the US dollar's demand zone gets taken out, that changes the story. Everything changes. But these are all valid areas of supply and demand that price is hitting. All right? So they have to be respected. We have to assume that these zones are going to hold. The only time these zones don't hold is when they have an immediate force greater than the force that's being interacted with, immediately in control. Then I'd expect this zone to be taken out. But right now we're in a phase of profit taking. There is no immediate higher time frame area in control right now. We're in a phase of profit taking. So the fact that we're in a phase of profit taking, I expect that these areas are going to hold and we're going to see them being respected. Okay? So let's take a look here. So I had pointed out this was a trade signal, an institutional trade signal. It became invalidated because there was a trade signal on the daily chart. But here's the deal. So this zone was nested within that daily zone that was part of the trade signal, and that's why it's being respected right here. But the only thing is that this zone here wasn't the best formed because we had some tall wicks coming up because of some data for the Canadian dollar. And so along that weekly demand, yeah, that's what I did. H4 momentum shift, boom, that happened. Now I'm looking for, and take a look, my bulletproof target would have been hit if I would have kept this trade, but I couldn't have kept it because I just didn't like the look of the zone. You know, it ends up holding, great. So I'll be looking for new trades to get in long. So longs at weak, momentum, that's taking place right now. So now I'm looking for new demand zones to be formed so I can get in. So I'm waiting for trade signals to appear to get in more long positions, because I'm already in long down here. So that trade's doing really well so far. Okay, Aussie yen. Darn throat. So we have monthly area of supply in control. That's why we're seeing this pressure here. We got some supply here, but we are reacting from a monthly bullish engulf. That's why we're seeing this push up here. Need weekly supply zone out for longs. That's right. Need this area out and then longs, and need weekly supply zone. New weekly supply. Need close below the weekly demand zone, which hasn't happened yet. For this for me to take this zone serious, we need a close below these areas here. We still haven't received that. So then there's really nothing else to look at on this chart. Okay, so let's go to Aussie Kiwi. There was a trade signal to go short here, but I canceled that trade signal because we never got consolidation away. All right, what ended up happening was price retraced right back up, which invalidated this zone, but it looks like, you know, it's holding somewhat. The force of price is definitely to the downside. You know, we removed some areas here, leaving just nothing to stop price from dropping all the way down here, but that's not where I'm looking to take trades. I'd like to take trades down here, targeting higher, because we got a 3-month area of demand, so the force of price is upward. So we're just seeing a retrace on the charts right now. So so for me, need weekly supply zone out for longs, or longs lower here, weekly supply zone for short with daily momentum shift. Yeah, if price was to get up here, I'd consider taking shorts if the charts, if the Aussie and the Kiwi charts were displaying what I would need to see to take that short. All right, but for now, I'm not taking any trades on that one. So let's move on to the CAD Yen. So CAD Yen just fell short of hitting a weekly area of demand, and our weekly imbalance, and we're seeing a push. We could get some shorts here. Things are looking good for a move up, and then boom. So we could see that, and I'm watching this. This is not a confirmed trade signal as of yet. I'm still waiting for certain things to happen, but if those things do happen, then taking shorts here will be a legitimate trade signal. Okay, so let's see. Yep. Yeah, okay, but for now, I'm not doing anything new. Daily demand zones at weekly demand zone lower. Yeah, that doesn't look like it's going to be happening anytime soon, so let's move on, shall we? So, Euro-USD. So, what's going on with this one? So, as the US dollar is dropping towards that area of demand, we've got the euro pulling back up here. Right? We're now in this imbalance right here. But just like with the US dollar, you do that, and technically we got an area up here. So if this does get broken through, it's going to be this area here where we'll see a drop from it, because it's a legitimate area. It doesn't have the best formation. The area here doesn't have the best formation. On the US dollar, it looks a lot nicer, but still it is a legitimate area. Okay? Weekly bearish engulf. And what do we see with the euro? Right? When price was getting up here, what did we see? Profit taking. A drop from 262, 258, 251, and we see some short positions being closed. So not huge profit taking, but somewhat some profit taking, right? So 262, 258, 251 over the last 3 weeks. So that was that. So that's all within this area of weekly supply, nested within this area of monthly supply. So again, this is what I am forecasting. A move to the downside. That's what the probabilities are telling me when reading price. The probabilities are we see a move to the downside. Gold's hitting supply, US dollars hitting demand, Aussie's hitting supply, Euro's hitting supply soon. Pound will be hitting supply if it continues going higher, and we'll take a look at that soon. God, I got a real lump in my throat today. So, so no trades for me right now. I'm in a bunch of short positions all the way up here, and I added one here. So looking to take profits on those when price drops down here. And I was asked about my risk management. What do I do with these random trades that I'm opening up? So I'm trading a theme here, right? I'm trading the theme of profit taking. We're hitting monthly supply. The institutions are overly exposed to the long side, so the theme is that they want to take profits on their longs. So when price hits an area of supply, they don't just, you know, close a big ton of long positions and then price drops from the sky down to the ground in one move, and then they start building up long positions again. That's not what happens. What happens is they take their time. Price hits an area of supply and they offload some longs, price drops, they let it go back up, they offload some more longs, price drops again. And what you'll tend to see a lot of times is that when price drops from these profit-taking zones, there will be news that comes out into the market or economic data that will be released showing good signs for the euro to go higher. Or some news will come out saying this hedge fund is saying that the euro is going to go up and they're looking to buy. Yeah, sure. Yeah, sure. You know, of course, they've been buying down here. All right? That's what they're buying. So now they're taking profits. You know, down here they didn't tell the world that they were buying. They tell the world that they're buying when price is down here. You get it? So then you get excited. You're like, oh, so they're buying. Great. I'm going to buy too. I'm going to think like the institutions do because they came out on the news and said that they're looking to buy euro. No, that's not how you think like the institutions. You think like the institutions by looking at the COD data and applying supply and demand and years and years and years and years and years of watching charts and studying charts for hour upon hour upon hour non-stop. And you apply all that together and you get in when you see the signs on the charts that they're getting in. Not here, when they're releasing to the world that they're long the euro. Because what's going to happen is you're going to buy it, which causes price to go up to those areas where they're taking profits on their longs. And then price drops, and then you're like, wait a minute, what just happened? I just read on the news that they're buying, so now its price is dropping? So you start losing on these positions that you opened up here. You start losing, and then you know it gets to a point where you're like, I don't know how much this thing is going to drop down to kingdom come, and I mean this is never going to end. So it starts coming, and then when it gets to here, you're like, you know what? I can't hold on any longer. I'm getting out of this position. So then you sell it, and then lo and behold, who comes in to buy it? The institutions. Boom. And then when price is up here and they've already filled in their demand, you're going to see it move. When momentum starts to slow down, then they're going to come out in the news again. Hey, remember when we said we're buying the euro? Yeah, we're still buying the euro. We never changed our mind. Excuse me. You know, we're still long. And you're like, oh damn it, I should have just held. Then you start buying here until it goes up and hits more supply, and then they do the same thing over again. You see? So this is the trick. This is what they do over and over again. Now I'm not suggesting that's exactly what's going to happen right now. I think there's a high probability that that's what happens. But I'm not saying that's exactly what's going to happen. I can't tell you what's exactly going to happen. What I can tell you is that there's supply here. What I can tell you is that they were taking profits on longs here. I can tell you that they were adding long here. taking profits here, creating supply here, price retracing up, US dollar hitting demand, gold hitting supply, pound hitting supply maybe soon. That's what I can tell you. Aussie hitting supply. I can tell you those things because objectively, that's what I'm seeing. I'm taking all the pieces of all the evidence that suggests what is in play, and I'm objectively looking at all the evidence and deciphering what all this evidence means, and I'm applying all this to my charts so that I can determine what is the likelihood of price going up or down or sideways. And then I take either trades based off of that theme, or I look for precise places where the institutions are going to make a move, or precise places where the institutions have made a move, and I place trades based on those trade signals. Alright, so that's it for the euro. Let's look at Euro-Aussie. I have orders to go long here, waiting for price to drop. Weekly area supply still in control. So right now nothing else to do. Euro-CAD, I wanted to take trades off of this area, but we never got price to drop. That's fine. So nothing here to trade. Pound, euro pound, this one's a mess, not looking at it. Euro yen, I put out a poll the other day on Twitter asking what everybody thought about the yen pairs, if they were going to go up or down. I think it was like 52-53% or something that everybody thought it was going to go down, and it's crazy. I can't believe how divided traders are out there. Half of everybody believed it was going to go up, half of everybody's going to believe that it's going to go down. Everybody sees their own thing, I guess, huh? Everybody sees their own thing. Everybody has their own perspective, their own beliefs. This one's difficult because I think if we do get them pushed to the downside, it's limited because of, you know, how the euro and the yen have been moving. So so we got a nice push down here, but daily supply zone out for long. So yeah, I would need to see this area out, and then I'll go long. But we got weekly supply here, so no, I won't go long. So I better change it to no long so I don't get tricked. No longs. Shorts if weekly trend line's taken out. Weekly trend line's taken out. Hasn't consolidated away. Yeah, we could get eventually some shorts maybe? Possibly. Possibly. We'll see. That hasn't set up yet. Euro Kiwi. New daily demand was at weekly demand. Nothing has been, no trade signals yet to go long. Waiting on that one. Pound US dollar. So I have orders to go short here because this is a nice area of supply. At a weekly area of supply, at a monthly area of supply. So if price does manage to go up here, I got orders to go short. But this one's stalling. When you look at the US dollar and how it's been getting weaker and weaker, this one's been not getting nearly as strong as what I would expect it to get. So again, let's take a look. Right, so we got the pound. What were they doing at the highs? Profit taking again, right? They were aggressive. They reduced from 99 to 95 and then down to 81. Profit taking, reducing shorts as well. Why? Because they're only 60% exposed to the long side. So if they want to increase those numbers, they got to do one of two things: increase longs, which will really show their hands, or decrease shorts in preparation for a move down. Profit taking on longs. Profit taking on longs. Reduce shorts. Maybe allow price to get back up here. Use whatever economic data you can or news to get price up here. Drop to eventually take longs lower on the chart. Have higher exposure to the long side, meaning bigger profits when price gets back up here. So that's what I see in play right now. I'd like to see a push up here because, again, I got orders to go short up there. And if it doesn't, that's fine, because I already got short positions all along here that I will profit with if price drops. Alright, and if this area gets taken out, then I will, and the euro breaks higher, and gold breaks higher, and the US dollar breaks lower. If that ends up happening, I got asked this earlier, hey, those positions that you open, how do you manage your risk? Well, basically how I manage my risk is I watch my drawdown on my account. And if these theme trades get to a drawdown of about 5%, that's what I usually look at. If it gets to about 5%, I start to hedge. So I start opening trades in the opposite position. So I'll start looking for long entries on pound and long entries on euro, so that the drawdown doesn't get any bigger than 5%. And I will hold those hedged trades until price eventually does return back towards my original entries, and I'll close out the positions. Most times they're for profits. Other times I'll just look for break even. So I'm putting myself in a situation where I can only win. You know, it's taken a long time to figure out how to do this type of trading, and it's not for anybody. It's not for everybody, I should say, because hedging is extremely difficult to do, and if you do it wrong, you're going to lose a lot of money. Alright? It's extremely difficult to do, and it takes an incredible amount of emotional stability to be able to do it, because your emotions can really quickly go out of whack very, very quickly, because you got a lot of positions open, and you know, you can start to look at the charts emotionally as opposed to objectively, and you can lose your cool. So I don't recommend trading like this for anybody. I don't. I do it for me because I've gotten to a point where I'm comfortable doing it and I'm profitable doing it. So that's what works for me. Again, weekly bearish engulf at a higher time frame area of supply. So that is strong. So let's go, baby. Let's get up here and I'll short you. Alright. So let's look at pound Aussie. Pound Aussie, pound Aussie. What do we got here? So I'd like to see a drop down to this weekly area of demand, because that's where I would like to get in long. But because there's only a area here that was tested, I would have to, off of that, the momentum off of daily. No, I would have to H4 momentum shift off weekly demand zone. So I'll wait to see if new signals happen down here. I'm not going to be buying blindly here. I'm going to wait for new signals to appear. If they do happen to appear, they may not. So based on what I can see now, that's what I would be looking for. Price to get down here, new trade signals for me to get in long. Pound CAD. So daily demand zone's off weekly demand zone, which was down here, so price never got down there. No shorts, so nothing to trade on this chart. Pound yen, no longs, daily wow supply for shorts. So we're hitting a monthly imbalance. Let me get to that. Let me just do something here. That's better. Monthly imbalance. Okay. So yeah, we could get some shorts, you know, yen pairs, right? Potentially setting up some shorts in the future. No trade signal as of yet, but keeping an eye on it. Pound Kiwi. H4 is off daily, hasn't happened. This is taken out. New area supply, not well formed. Weekly area supply. So I'd be interested in taking longs, but like lower in the charts, with new trade signals. Not buying blindly down here. They'd have to be new trade signals. Here we go we have a trade signal in the process of being created. Hasn't happened yet. I'm waiting patiently. I've got orders to go long here on the weekly chart, and then I'll build positions if or when price gets down here. I'll get in here, and then I'll look to build positions as momentum shifts to the upside. But I do see a trade signal to get in short this one being created. It hasn't completely been formed, but so far it's looking really good, so I'll wait for that to happen first before I place my orders. US CAD, so reacting to this area of supply, we see the pressure to the downside. I still have orders sitting here. I said I was going to cancel them because I was looking at the COT data and I could see that down here there was no orders being filled. Okay, but because the US dollar was dropping towards an area of demand, I thought that if this was to fall the same pace as the US dollar, I'd be interested in getting in long if the US dollar was hitting that area of demand as well. That hasn't happened. So my orders are still in here because, you know, technically looking at the charts, this is a trade signal. This is a trade signal for me. So I'm leaving my orders until something tells me that I should cancel them. Okay, Kiwi also hitting areas of supply, right? Let's look at the CFTC report. What did it show us? That they were adding long and leaving their shorts pretty much alone. So they're adding longs up here. So no profit taking, so we could see a break to the upside. But again, this is supply. It broke a trend line, price retraced, so it's very possible to see a move down like this with the other pairs, just like with the pound and euro and all that stuff. So that's the confluence that I see. So the overall theme of profit taking is still in play, in my opinion. There hasn't been anything that's changed that, and that is what used to happen to me when I was you know, not as experienced in trading. I used to examine the markets and get in tune with the markets and be objective with my analysis, and I would say, okay, I see what's happening. This and this and this is happening. And if you take a look at all the charts, you can see that they're all in confluence together. The story is pretty clear. This is what's taking place, right? I would do my analysis on the weekend. Monday, Tuesday, Wednesday comes by, boom, we have a day like today. Price is moving in different directions, and I'm like thinking to myself, wait a minute, maybe I was wrong. Let's go with this new idea of what I'm seeing on the charts right now, that maybe this is what's in play. And then what happens? You know, a week passes, 2 weeks pass, and then I end up looking at the charts and I'm like, darn, I was correct the first time when I was emotionally in control, when I was objective, when I was looking at all the evidence and doing the work when the markets were closed and I was unemotional. This is what I saw. But then I let my emotions get the better of me because I saw price doing something different midweek, and I just gave up on that analysis in a heartbeat, only to be shown that I was correct the whole time from the very start later on. So after years of having these experiences, I've, you know, and working on my emotional intelligence, I've become smarter to this. And so that's why I do my work on the weekends. I put the pieces of the puzzle together and figure out what's truly happening, and then I stick with that theme. The only time that theme in my mind changes is when I see objectively reasons to tell me that the theme is no longer active. Okay, so that's pretty much it. Let me just take a quick peek at Bitcoin. Yeah, so Bitcoin, you see on the news, everybody's like, oh, the hedge funds are getting back in. Yeah, there's a supply zone here, here's a supply zone here, here's supply here. Not one of those areas of supply as profits were being taken on longs and short positions were opened by institutions. You know, Remember all these institutions, all this news? Hedge funds are opening. Cryptocurrency hedge funds are opening all over the place. Yeah. Right when they opened up contracts, futures contracts on Bitcoin. Why do you think they were doing that? So they can sell it short. Okay? Here was that supply zone. This was the last area of demand that pushed price up. It got removed. Created this area where the institutions were selling it. They filled in some orders here. They filled in the rest of their orders, and boom! All the way down. Creating areas of supply. Not one of those areas of supply were taken out. And they were already on the news saying, oh yeah, the institutions think this is a great opportunity to get in long again. Man, you know, it's crazy. Not even one area of supply taken out. How can you go long when not even one area of supply has been taken out? You know, it's crazy. You can't trade like that. Anyways, I don't touch this because it's not good. It's gambling, and I'm not a gambler. I'm a trader, and I trade based on evidence of things happening. Putting the pieces of the puzzle together to make profitable trades happen. Alright guys, so that's pretty much it, guys and gals. That's what I'm looking for in the markets, and I'm going to be waiting patiently, keeping my emotions in check, doing meditation, going for walks, not letting myself get off of my way of thinking, my wavelength. Alright? So, this is the process I go through every week. You see the COT report videos that I do. That's the analysis that I do on the weekend. And then you see these videos that I do where I midweek, maybe Tuesday, Wednesday, Thursday, whenever I see the markets re-engaged, I do one of these videos to say, okay, look, this is what I'm seeing, but calm, cool, in control. This is what's going to happen for my mind to change about the theme here that's in play. But these are the trade signals that I see, or this is what I'm waiting for. And this is the process that I go. And this is the process that has led me to be consistently making money in this game, where so many others lose because they focus on other things. This is the process that makes me money. This is the process that I have to go through every single week to stay cool, calm, and collected. And this is why my analysis is accurate, and this is why my trades are accurate. And this is why I make money. This is how I make my living. So, anyways, that's it for my lecture. I hope you found some use from this video. Happy Valentine's Day, and enjoy the rest of the day. Spend some time with your loved one, and until next time, have yourself a great week.